Joining us now is Citigroup airline analyst and managing director Stephen Trent. Stephen, thanks for joining me today. Talk to me about this proprietary data. What are you seeing?
Yes, good afternoon, and thank you very much for having me on. We are seeing very good movement in the U.S. domestic booking curve. When we look at ticket revenue growth for June travel, for example, we see that the revenue is up 16% versus 2019. When we look at some of the international corridors, such as the Transatlantic, the data is even stronger. So I know there are some cost headwinds out there. I'm not 100% convinced that this week's oil spike is necessarily going to set the tune, per se. But the data we're seeing on the top line side still supports our constructive view on the space.
Okay, so in light of that, and in light of the fact that we did see a lot of these names fall this week, what are your top picks?
So we really like Delta Airlines. And when we look at the momentum from the revenue side, what are people going to be talking about 1 year from now? I think it's going to be the strength on the Transatlantic, those various corridors. I think Trans-Pacific strength is going to play a role as well. You look at Delta, you also have to consider, I think, the significant increase that the carrier is showing in terms of its loyalty and co-branded card revenue. So that kind of working capital tailwind wasn't there during the last major economic crisis. And not to mention that, this is a fast-growing piece of the pie. We're also constructive on Frontier Airlines. And I think, looking at the domestic market, assuming we do get some moderation in economic activity over the coming months, there's a possibility that a lot of consumers are going to trade down looking for cheaper tickets. And in that economic moderation, we get some oil price roll-off. The airline with the best seat mile cost profile is going to do well.
Okay. Two names for our viewers to consider. Stephen Trent, thanks for joining me today.